I'm actually bearish. And again, I know no one out there wants to hear that. Everyone wants to be a bull on Bitcoin. But the bottom line is, if you compare this to rallies in 2018, 2019, if you compare this to rallies in the previous cycle, it's very, very similar. We haven't seen any major breaks of any levels yet that would denote a bottom in Bitcoin. So I don't even think we've hit the lows yet on Bitcoin.
President of InTheMoneyStocks.com, Gareth Soloway, does not expect similar performance from Bitcoin and suggests Bitcoin could drop to $9,000 per coin. A master trader said, "I would dare to say that without the Fed's printing of money, Bitcoin is headed towards $12,000 to $13,000 and maybe as low as $9,000. Before going further in this video, make sure to subscribe to the channel. The value of Bitcoin has risen and fallen dramatically over the years, with some periods of rapid growth followed by steep declines. Bitcoin briefly reached the $25,000 level, but has since fluctuated and is currently trading below $24,000. However, a few days prior it was trading steadily at $25,000, which was the first time in the last 6 months. Crypto market at 1.07 trillion, Bitcoin loses 0.15%, Ether dips 0.4%. Many professional and Bitcoin investors are eagerly anticipating further gains and hoping that it will stabilize beyond the $30,000 level. Although Bitcoin has gained over 40% in 2023 and has increased by more than 38% in the past 30 days, it is still down by more than 65% from its all-time high. Despite Bitcoin's recent upticks, Soloway noted that it is simply a pleasant rebound, and he maintains his belief that Bitcoin is continuing to experience an overall downward trend. Now let's have a look into Gareth's charts.
Look back at the chart in 2018, 2019. There were lots of bounces of this magnitude. In fact, there were bigger bounces. I still remember vividly where we hit a low of 3,500 on Bitcoin back in 2019 or so, and we actually doubled the price before retracing all the way back down to 3,500. So again, that was a 100% move. We haven't even come close to that on the chart of Bitcoin at this point. Now, if we look at this area here, channel right here, the blue channel tells us that there's resistance here, and look at how this line is right at 25,000 and it keeps on getting pushed back under, and we're seeing the daily chart starting to decline. The key here is this: is there a chance we break above 25? Of course. If we break above 25, you have upside to 30,000. 30,000 is the pivot low from the bull market of 2021. It's also where we consolidated before breaking down. That would be your next move. Only would I get bullish and start saying there's a bottom in the Bitcoin market if we trade and stay above 30,000. That would be significant. Until then, I'm a bear. If we break 22,000, it's going to be a big shot straight down to 18 and change. So again, I'm still in the camp that the lows are not in, the bear market is not over in crypto.
According to Gareth, the market's tendency to fluctuate based on fear and greed makes gold a highly promising investment. He is particularly optimistic about gold due to the impact of interest rates and inflation, predicting that its value will rise significantly. Gareth goes on to provide multiple precise price targets to support his bullish stance on gold. Compared to last week, the price of gold is down 0.86%, and it's down 2.63% from 1 month ago. The 52-week gold price high is £1,575.31, while the 52-week gold price low is £1,514.79. Gareth believes silver is building energy for next explosive move and has the potential to increase in value over the next 12 months. However, he warns that the market for this white metal can be quite volatile and is optimistic about silver's prospects, stating that he thinks a breakout is likely to occur in 2023. Nevertheless, he cautions that silver needs to surpass the $25 to $30 per ounce level before the anticipated breakout can happen. Silver futures sank below $20.06 per ounce at the end of February, risking to close the month 14% lower at their weakest level in 4 months as expectations of higher interest rates continued to pressure bullion demand. Let's move towards charts.
So I am bullish on gold again. I don't think it has fully baked in and come back into the lows where I think it's going to go. But I'll just kind of walk you through some of the trades. So when we were obviously down in this range, I was long gold. As we kind of got extended up in this range, I unloaded my gold positions. I did so just based on the fact that it was overbought. Now, one of the things I look for is as we retrace, I look for key pivot points. And if we see right here, you can see this low. And if we just take a trend line through here, look at how it goes right through this low, right through here, right through this high. and right through these highs. So that to me is your kind of max downside on gold here. That would be another classic retrace to the scene of the crime. And also, so that's right around $1,800. The other thing that's kind of interesting here is if we look at stocks like Newmont Mining, take a look at this chart. This chart here, look at all this support right in here and look at where price has pulled back to. So for me, I'm starting to actually accumulate. I picked up a little Newmont Mining. I've got a couple other gold miners out there. I'm not quite in the GLD yet, but I certainly am looking to buy it on any weakness here. I still think, and I said this at the end of last year, gold will be the best performing asset again in 2023. Silver's a little bit trickier. I still am a huge midterm bull on silver, but the one thing you have to remember with silver is that it's an industrial metal, right? So it's not quite as easy to kind of gauge it on just fear and inflation. Now, having said that, we could see that we had this channel up here when it was at its highs. It broke, and we've seen a downtrend come in. Now, we did touch a major support right here at around $21.20. I do still think there could be a little bit more downside, just like gold, but look at the chart. Same kind of thing as gold's chart, where it's starting to come back into previous pivots. Previous pivots, which were resistance here, it was having trouble getting through it, now becomes support on the other side of the coin here. So again, for me, it's a little harder to read. There's a little bit more risk in the silver investing because of the industrial side of silver, but I am a midterm and long-term bull on silver.
Tesla stock has displayed significant fluctuations in 2023, with prices ranging from $108 per share on January 3 to $214 on February 14. However, despite this volatility, the company's growth potential has garnered optimism from analysts and investors regarding its long-term outlook. As of the time of writing, the stock has surged by $88.78 year-to-date and is currently trading at $196.88. On TradingView's one-day gauges, Tesla's technical indicators present a mixed picture. The summary reflects a neutral sentiment at 10, while moving averages suggest a buy at 9. However, oscillators are indicating a sell with 2. Gareth also discussed the outlook for oil, predicting further declines due to signals from the U.S. economy that a recession is on the horizon. Additionally, concerns about a potential recession in Europe and China are not boding well for oil's prospects.
Tesla has the brand name, which is very, very strong. Everyone loves Tesla. Well, not everyone, but it has a big brand name. And then also you have the lower price. So this is a move by him. And what you have to read this on a company basis. This is him saying, okay, we have competition. We're going to sell less vehicles as a whole. Our market share is going to go down. So we need to kind of try to get that market share back by dropping price. Now, if we take a look at the chart, let's see what the chart is telling us. So if we pop over to the chart, we see that there was a lot of resistance right up in this range here where we got to. We've now started to pull back. Now, you do have a significant area of support right here at 188 to 189. If that breaks, I think you have a lot of downside in Tesla back to about $145 a share. So again, right now, I think you have to be a very, very cautious investor here. Number one, we haven't seen, it's not a real rebirth of the 2021 period where you had free money, QE, government sending out checks to Americans. I mean, people were staying home, so they had extra money to invest. None of that is the case anymore. You have interest rates again soaring to 5% on the Fed funds. So you have to be aware that these big bounces in these kind of tech names that were so popular, they're probably going to come back in at least somewhat. And I think, again, this level here around 144 to 145 is a good near-term target. There's never any sort of situation where oil totally disappears off the market. Even when countries ban it, there's still ways to get it out. You just have to sell it at a discount. And that keeps the price of oil down substantially. Now, short term, there is a bull flag on the chart that could tell us a little spike is coming, but I still see further downside in oil, not just because of what you mentioned, but also because of a slowing global economy. And again, as long as the Fed keeps interest rates here or higher, you have to think that the economy in the U.S. will slow down. Even China's reopening, it's not going to last forever in terms of the strength. And so I do think over the mid to longer term, you're headed back to the 60s on crude oil.
Many people are wondering about the future of Bitcoin and have questions in their minds. Will Bitcoin experience another surge in value? Or will it crash again as it did in 2022? What is your opinion on Gareth Soloway's forecast for cryptocurrencies and gold in 2023? If you hold a different view, then what are the reasons behind your stance? Do share your perspective in feedback area below. And let us know you found this video interesting by tapping like button and do subscribe to join our channel.